I have about $3,800 worth of trade reviews that I want to share with you guys, primarily trading the supply and demand trading strategy. Now, I've been doing this for 12 years, worked with thousands of traders, so I want to show you what is going on in my mind as a professional trader, as well as someone who has worked with thousands of traders and the common mistakes that I see traders making while trading this strategy. So we're going to go over about 4 or 5 trade reviews, as well as look at some watch list ideas about why I like this buy setup, why I like this sell setup, so that you guys can become profitable traders. So let's get into it. So the first thing that I think a lot of people lack is a trading edge. Now, what is a trading edge? You guys have to remember that a trading edge is nothing more than one thing happening over another, statistically, right? But I think a lot of people fall trap into the mindset of thinking, oh, if I have A, B, C, then 65% of the time X, Y, Z happens, right? And I think that's a recipe for disaster because you're setting yourself up for disappointment with that. So I think a lot of people rely strictly off of technicals when it comes to a trading edge, when they really need to be considering all of the other things and all the other factors. What is the sentiment report, retail sentiment, COT, geopolitical events going on? What is the general market condition? But also, what is the fundamentals driving this market? Okay, earnings report, GDP. Apple just had their press conference, their technology event showing their iPhones. It was a disaster, so their stock takes a hit. Why are you sitting there trying to buy Apple? So like all these things drive the markets all together. And then you have to start considering a personal edge, okay? You know, what are your strengths and weaknesses as a trader? Are you swing trading or day trading? Is it built around your, your personal style? And I think a lot of people lack this and they think they just need one or two things, okay? So primarily we look at technicals because that's all you need to really have an edge, right? A core strategy, maybe it's indicators, price action, but it's the slimmest portion of an edge that you can have, okay? But if you have all these things, I think that creates a high probability edge, and that's something that we do with traders in the Moneyball trading program. So let's get into a technical edge right away. So this is a gold short setup, multiple time frame confirmation. I talk about this setup almost in all my videos when I talk about supply and demand, and I want to share with you like the reasoning behind this. So on the gold market, using the 1 hour time frame as my highest time frame, the first thing I always do is I draw out my supply and demand zones. So this was my level of supply on the higher time frame. It's a very strong imbalance to the downside. Look at what these imbalance candlesticks are accomplishing. You see those very strong imbalances, how the candlesticks look like this, right? And not 50% candlesticks like this. Okay, well that indicates to me that there was a lot of sellers stepping into the market. So if and when prices return back into this area, I want to be looking for selling opportunities. It's got over a 2-to-1 imbalance. It's removed opposing pivot point levels. It's a very nice 1 hour supply zone where sellers took control. So once prices come back into that level of supply, I then went down to my smaller time frame and I needed to wait for prices to turn inside out, confirmation, right? So I see prices making higher highs, higher lows, higher highs, higher lows. And then it wasn't until this point in time where we finally got that imbalance to the downside where we start taking out opposing levels, right? So you can see here where we start breaking this upward momentum line, taking out pivot point zones, taking out pivot point zones. And then I have this, once again, a very strong quality rally-based drop supply zone here. We're gonna go back to this concept here again. That's why I'm entering the short on the pullback and just getting out at a very quick take profit. So this was a $527 profit. That's great. But this was also against my COT report. So I'm sitting here trying to sell this thing for a day trade scalp. And what do I notice? Well, I notice week after week, they've been adding to their long positions in the gold market. This is the COT reports. I actually just talked about this in my last week of trading, in my last video. It's like a 45-minute video going over how to read the COT reports, how to trade them, and why it's so important. So it's a fantastic video. You can see where the institutions are buying and selling at and making sure that you're not late to the party or trading against them. So in this case, I'm actually trading against them, but I don't mind that because it's such a smaller time frame trade. I mean, I'm in and out of this trade within an hour, right? So I don't personally really care too much about what's happening on those report side. But yes, I am trading against the COTs and fundamentals, but this was strictly a technical edge, okay? Strictly technical. The edge is going to be a lot smaller, but still nonetheless, it was a good trade. Let's go over another one. So you want to talk about like what is a trade example of if I have sentiment report, fundamentals, and technicals? All right, let's talk about it. So on the sentiment report, when we look at the report side, we can see here that, where is this? Their net positions, where is this? The Japanese yen? Yes. So over the last couple weeks, the Japanese yen went from 179,000. Do you guys see that? 179,000. I know it's a little blurry. Sorry, I'm scrolling in, but work with me. This is going to change your trading career out. They went from 179,000 and then they went to 176, 172, 167, 164, 151. So what do you think they're doing? They're trying to sell this market, and of course, it's going down. Okay, so I have my sentiment bias that they are, closing their long positions, adding to their shorts. Fundamentally, this Japanese yen is not strong at all. Their currency, their economy in general has been very negative over the last year. It's forecasted to continue to get worse. So long term, it's a weak economy. It's a weak currency. But then technically, I have a beautiful, beautiful level of supply right here with a very strong imbalance to the downside. Once again, going back to that previous trade review, do you guys remember that conversation? 2-to-1 imbalances, strong momentum lines being broken, and opposing levels being removed. So opposing levels, momentum line being broken, right? And very strong imbalance. Notice how these imbalance candlesticks are doing everything. That's primarily what I want to be focused on. Like those are levels that I want to be looking at. I'm just entering the pullback back in here, stop loss above here, above structure, and getting out down there for what is this, $925 profit. So that's a really good trade review. That's a combination of like the largest type of edge that you could have. You have sentiment, you have technicals, you have fundamentals. It can be quite overwhelming for traders going at this by themselves. I totally understand. But that's why you have me. That's why you have a coach. That's why you have somebody that you work with directly, one-on-one, who's been doing this for 12 years. Okay? That's why it's important. You're not watching some guy or learning from some guy that's been doing this for 2 years who's 18 years old. All right? I've done my fair share of these markets. I know what the hell I'm talking about when it comes to, how to trade the markets and what's going on. You have to consider this type of stuff. It drives me crazy when people think, oh, I don't know what news is coming out. I didn't know there was news coming. How do you not know that there's news coming out today? Like Friday, or I think it's Thursday, CPI event. This is a highly anticipated CPI print that's about to come out, and so the markets are really watching this to see what's going to be driving the market. Are we going to be producing a high CPI number, below CPI? How is gold going to affect this? Because, you look at gold is up, over 10% over the last week. Okay, it's up over 10% for the last week. So how is a positive CPI going to affect this? How is a negative CPI going to affect this, right? And so we have a plan in the program to say, like, if prices do this, if the print is like this, and this is how price react, we're going to be, ideally targeting this. You know what I mean? But you look at gold, as much as if I see gold selling off hard, then I need to be looking at something as probably selling the silver market, because silver is a better market to short, in my opinion, because it's inside, over here to the left, it's inside reacting off of monthly, weekly supply. This is a supply zone that was created during the silver hunt, the Hunt Brothers silver squeeze. Okay, it's a good story for you guys to research on how silver went up to $50. They cornered the whole market. And so prices are coming back up into a weekly level of supply, which has not been making the same move as in gold. But this is a market that I would much rather sell. It's been ranging over the last week. And so if it starts breaking out to the downside, I would rather target shorts in the silver market rather than gold. You're still going to be probably getting the same effect, but I think it's a higher probability, in my opinion, to be targeting the silver market rather than the gold market, because the gold market is sitting at all-time highs. You know what I mean? So it's just little things like this that, you know, increase your edge as a trader that you have to understand. Okay? And we'll go over some more trade reviews, but I want to talk about this trade setup right now in Bitcoin. Like, this is before we get into those trades, yeah, because we got a couple more. I want to talk about this long setup in Bitcoin. So in Bitcoin, over the last couple of weeks, we've been pulling back into this previous level of daily demand zone. Fantastic level of daily rally-based rally demand zone. Very strong and balanced to the upside. And so with prices returning back into a daily demand, which is also previous support, like, don't get me wrong, guys. Remember how we were talking about this? Like, you need an edge? Okay, well, let's go back to this. An edge. This is actually a video that I did on trading psychology. It's a great video. It's like 2 weeks ago. 12 years of experience of trading psychology in like an hour and a half video. Fantastic. And we were talking about all the common issues and how to solve them. But technicals, okay? Looking at your core strategy, looking at indicators, chart pattern, what are other traders thinking, right? This is technicals. This is the bare minimum that you need for an edge in the market. You can rely off of just fundamentals in trade. You can have an edge. You could rely off of just sentiment, which is probably the hardest to have an edge, in my opinion. Fundamentals will drive it long term. Technicals, you could have it like a mechanical edge. But there's, you know, a lot of discretion that you need, right? And you need that personal edge in general. But if you can combine everything together, which is something that we try to do in the program, that's how you have the largest edge that you can have, right? So when we look at crypto market, we have prices reacting over the last week off of previous all-time high resistance, which is now going to be support, right? It's a very obvious resistance now breaking through. Like, notice how strong prices shot to the upside. Okay, well, like, if prices return, I think it's a good value level to consider buying opportunities. And so we've already broken daily downward momentum line. We were talking about this in the program, saying, I like buying opportunities this whole week because we're located inside a weekly support, all-time high support, weekly daily demand zone, and we've already broken daily downward trend lines. And so this is that first indication of price starting to turn inside out. And so I think there was a couple buy setups like we were talking about in here. I mean, even also sell setups. Like, this is a brilliant level of supply in here. You know, nice little supply zone to consider selling if prices ever return back into it. But the buy setup that I really like is going to be down in here. Now, it doesn't mean that it's going to have to be a winner. Let me delete this so it doesn't confuse you guys. This is an indicator, in case you're wondering, that just marks off the Asian high, the Asian highs and lows, London highs and lows, and New York session highs and lows. It's just an indicator called market sessions. Now, this is a demand zone right in here that, look at what this demand zone accomplished, okay? As a technical, we're gonna scroll out a little bit. Very strong imbalance. Remember how we're going back to this concept? This is a question that you need to ask yourself. If you're trading supply, just ask yourself, what is this imbalance accomplishing? What did this zone accomplish? Okay? Very strong imbalance to the upside, going over 2-to-1 within the first 3 candlesticks. It's blowing past opposing pivot point zones, previous resistance, right? This whole level is a very clear resistance line. So this is where the origin of the imbalance occurred, plus price has already reacted off of higher time frame weekly demand, and we're beginning to turn inside out, right? So this is why I like this level, I think, as that next potential trade. Now, the question is, where would your stop go, right? Well, there's 2 ways I think your stop could go. I think you could have the tight stop maybe down in here, or the wide stop down in here, below structure. I think both are correct, but it depends on the game, because obviously if you have a wide stop loss, you're going to have a higher chance of winning the trade, but you're also going to make less in your trade. Now, if you run the chance of a tighter stop loss, as in, say, for example, let's go, we buy here on the pullback, and we get out here at, let's just say what is this? A 3.4-to-1, let's just call it a 4-to-1. Let's just say 4-to-1. The odds of a 4-to-1 being a winning trade is extremely low, right? It's not some 60% chance, guys. It's not. That's delusional thinking that you're going to be right without insider information on something like this and have a 60% win rate. Realistically, this is probably a 35% win rate, probably, potentially. So I'm going into this trade thinking it's going to be a loser if I have an outlook like that. Versus if I have a stop loss down here, all the way down here, it's a lot more difficult for me to actually get liquidated because prices now have to go all the way down here, right? But I make less on the trade. I only need prices to go 2-to-1. You understand? So this is probably like a, I don't know, maybe a 40% or 45% chance of this being a winning trade. And so there's pros and cons to each, and this is why it's important to customize your trading plan to yourself. And that's something I work with directly. It's very difficult, you know, to have that conversation with yourself without taking trades, figuring out what you like and what you don't like, actually knowing, are you taking good trades? Because I see people all the time take trades and I'm like, dude, what are you doing? Why did you not journal the trade? You know, why are you making this mistake that I talk about in, like, I don't shut up about in all our meetings? Why are you making this mistake? Right? And I think it's just having that personal account, that person there to, you know, keep yourself accountable. It doesn't bother me. It's your life. It's your money. But I mean, at the end of the day, you want a coach to be working with you directly. You know, I'd love to have you guys part of the program. You know, check out in the description below. It's where we have our 2x weekly coaching calls, going over our Sunday weekly watch list, the Wednesday trade review meetings, going over people's trade reviews. And it's just a great way to become a profitable trader with realistic expectations rather than thinking we're going to double and triple our account. So let's get back into a trade review really quickly. Let's look at the NASDAQ. Now, the NASDAQ in this case has definitely been adding into their long positions overall. Okay, so recently over the last couple of weeks, let's look at here. I see that they went from minus 174 contracts down to minus 144 to now minus 180 to minus 86,000. So they're closing off their short positions, getting long. Okay. Technically too, so sentiment-wise, we just explained that. Technically too, stocks, statistically, it's going to have a higher chance of going up. Okay, like I think it's like a 56% chance that it's going to be a green day. So statistically, it's a better opportunity to go long, right? So longs are good. And we have this beautiful demand zone right here. Look at this, guys. Rally, base, very strong and balanced to the upside. I love a fantastic level like this. Buying the pullback back into, I just drew that drawing, my bad. But hey, it's cool. That's what it might look like. That's what you gotta like. You gotta like drawings like that. You know? Feels good. Come on, say it with me. It feels good. Okay, I'm just joking, guys. I'm joking. I gotta have some fun with these recordings, guys. It's just me. All right, let's continue. But yeah, that's what we're doing here, and I think that's another like $500. So can't complain. What is this one? $1,300. We went over that trade. Let's go over one of these trades here. Austin's trade reviews, and you're going to notice. Check this out. CAD. Watch this. CAD trade review. Aussie stock. NASDAQ, CAD, stock, CAD, Aussie. So a lot of those trades that I just mentioned, Aussie, CAD, right? There's a reason why it's the Aussie and CAD. And then maybe 2 months ago, it was all about the euro and gold, right? Because these markets move in waves. And so that's why it's good to also give yourself that ability to look at several markets so that you can pick and choose what markets that you like based off of your strengths and weaknesses, based off of what's performing in the market, and focus on those markets. So that's why recently I've been more focused on the Aussie and the Canadian markets. You know what I mean? But I think I closed off another 25% of my position on this stock. I mean, my gosh, guys, up like 40 racks on this now, $40,000 on a stock like this that I've been calling out to the group ever since 1975. Absolutely doing fantastic on this. I've been closing out as we go up to the upside. We've been closing 25% off at a time. So can't complain. That's Barrick Mining. Let's have a look actually at that right now. ABX. Canadian. So we got to look at the Canadian stock. Yeah, so this one is absolutely just mooning. And so That's a great level, just buying back into 1970 territory. Back here, back in last year, 2024, fantastic buying opportunity. And then rallied up to 28, took some take profits, and then I took some more take profits around 35. And now I'm holding also up to hopefully 48. I mean, it's just continuing to rally, but I think a pullback will happen on something like this. But I've been making sure to keep the group updated on, you know, longer term plays like this, right? This is like a longer term position hold. Alfred taking a short position. We actually talked about this in our Wednesday meeting today about how I understand why you're selling this thing, but I also think it's quite aggressive, but I'm happy the way that he managed this trade. Now, if you have a look at the reports, so you can see here that they went from over the last couple of weeks, 234,000 every week, 209, 162, 153, right? Back down to 141, 116, down to 102. So they've cut their position in half. Now, you might sit there and say, oh, let's continue to sell this thing. I understand why somebody might have that position to say, let's continue to sell this thing. Now, right now, I'm hands off of this thing because it's sitting inside a nice level of weekly demand zones. So I understand this is a period in time where I might start to see the reports of them adding into their long position. They might start closing off their short positions, meaning buy. So at this point, to me, I think I'm staying on the sidelines. Plus, what do I say here? I actually had this all documented here for you guys in our watch list. Yeah, so OPEC increased oil production by 137,000. COT reports showing weakness. Trump wants a weaker oil, but then you got a lot of political events going on. USA, Venezuela, Ukraine, Russia, Israel versus everyone. I mean, they're in everyone's pants, man. It's just an ugly market, man. It's just an ugly market that I really can't get behind. Is it going to the upside or downside? I really don't know. And so it's for that reason I'm staying on the sideline. But we were talking about saying, look, I think this is a brilliant level. It could also be used as higher time frame. And maybe you want to scalp something if prices return into it. But it's not something I'm really going to trade. But I think it's good that he managed his position at that point in time and closed it off at a break even. It's the same thing like we talked about on that crypto. If you didn't want to use a level like this as a buy on a 1 hour time frame, you could use it as a higher time frame, right? There's nothing wrong as using that 1 hour level as a higher time frame and then waiting for prices to come in. And then you're waiting on a 1 minute, 5 minute time frame to capture that buy setup, right? It's the same thing on every market. On the stock market, we were talking about this yesterday. Prices breaking above all-time highs on the 1 hour time frame, like we broke to the stock market on the S&P all-time highs. We look here, Wednesdays, 60% over the last 6 months. We're here over the last 6 months. If the first 1 hour candle of the New York session is green, then 75% of the time prices will close for a green day. That's a really important thing. So if you notice the first hour of the New York session is green, well, then 75% of the time, it's going to close green on the day. But then also over the last 6 months, Wednesdays hold the highest chance of a green day, sitting at 69%, right? So we're trying to build up these odds to say why prices will do one thing over another, and then use our core strategy with, you know, current reports about what's going on driving the market. And so that's why we were talking about, you know, this being this demand zone, a brilliant level of demand. I think some people were waiting on this pullback, but ended up just missing the pullback. It just missed, it took off, pulled back again, went in favor. So maybe you take profit, maybe you get out at break even. That really depends on the trader, but this was not something, unfortunately, I was in. But I know a lot of people in the group missed the entry by a little bit. So I think a lot of them pulled their order at that point, which is cool. You know, that's what we try to do. We try to create profitable traders. So I would love to have you guys part of the team. You guys can join in the description below. I'll have that link for you guys to join the program. And you can start working with me directly and getting you to become a profitable trader, whether it's day trading, swing trading. I appreciate if you guys like this video. You guys can always reach out to me on social media at MoneyballAustin. And if you would like to watch that video I mentioned on sentiment reports, I'm going to put it above my head right now. That was last week's video. Fantastic watch. Go check it out and let me know what you think. I'll see you guys in the next one. Cheers. Bye-bye.